Hello, YouTube. We have a new all-time high. The Nasdaq got above 408.17 and notched a new record high, a new record close. And we also see unusual strength over in the Russell, actually getting over 200 and actually also breaching a key weekly high, which means that we're now at a new 52-week high for the Russell. But what exactly led us here? Well, it's a lot of extreme greed. We're at 80 now. So we've talked about the warning, how we don't buy extreme greed in big ways. We want to make sure we're managing risk, raising stops, and trimming. And right now, the Fed is being bullied. It has a real communication issue. And the market is now pricing in 6 cuts in 2024. So the market is being bullied by the stock market. Oh my goodness, are we back on this on the playground? Looking to the stock market, well, as we know, there ain't no party like a bull party. In the last 7 days, the market has been on a tear. AVGO is up by 11, Nvidia 7, Amazon 6, Meta 7, Google 4. And we also note that the seasonality chart implies that we should keep going higher from here. What does that mean? It means even more greed. It means even more bullying and maybe even more gains. But we're going to go through and talk about an important lesson today, specifically how the stock market is a gift for the people who can be patient, and it transfers money from the impatient to the patient. We're also going to go through and look at a true market wizard, or Mark Minervini, who goes through and provides an update on something he likes to call a lockout rally. A lockout rally is something that shows strength. So what exactly do we do from here? And then finally, just as we're getting started, I just want to tell you that today's video is not going to have a lot of new things to add. So if you want to see exactly what I think, I would encourage you to go back to roughly 2 weeks ago when we were talking about how not yet, what now, buy, and then look at this. This is the video where we left a lot of insight on this one here. We talked about how it could be a bear trap. Oh my God, it looks like a huge bear trap. Here's the trap, 3 red videos, and then flip, boom, 5,200, risk on, bears lose, up. Is it 1982 again? Hold my beer, or new highs, and we got it. So there's not really all that much to go through. So what I want to do today is really leave you with a plan that I am trying to action going into the end of the year. As we're getting started here too, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. We do put out stock market videos every single day, and I'm live at 9:15 Eastern every day to take you through the open. So the list of stocks that are now in blue sky territory is growing. We're now at 30. And if you find any, please leave me a comment. If we pop over here to monthly charts, we note that QQQ is now joining the party after we already see SMH or chips in new all-time highs. And we also see VGT, or the Vanguard ETF for tech, also in new all-time highs. And then also the Spider Managed ETF, XLK, already in new all-time highs. And the Dow, you guessed it, new highs. The market is strong. The market is bullish. The market is greedy, and it wants to go up. It was just at 80. Now it's back down here at 79. But this is getting pretty extreme. If we look back here to our timeline, let's see just how high we got. We got to as high as 82. Here we got to 81. Here we got to 82. We got to 82. Here we got to 83. So let's just make sure we're mindful of this. This is a reminder where extreme greed means that it's a time for us to manage risk, setting stops, raising stops, and trimming. If you have not already done that, I would encourage you to watch the stream from this morning where we go through and talk about a lot of that. But what I want to understand is what is actually driving the market. It's a real problem with communication. So what this basically means is that the whole point of Fed communication is to do 2 things. One is to be transparent, and 2 is to enhance the power of forward guidance policy. Instead, Fed communication confuses people. I think we have a real problem. Oh, crap, right? The market is absolutely correct in trying to do 2 things. First, it's trying to bully the Fed because the Fed seems to be willing to be bullied. And second, to get carried away with the notion that the Fed is put his back. So if you're unsure what all that means, again, I would encourage you to rewind. This is like really simple. It's only a couple of words. I think we want to understand what's actually driving the market. The fact that you start to show on Tuesday, the fact that you start a show on Tuesday talking about a meeting from last Wednesday, because today is Tuesday, and we're talking about the Fed meeting last Wednesday, is an indication of how absurd this whole thing is, he said. What does that mean? We're talking about something that happened 6 days ago. And again, let's read the quote just to make sure it makes perfect sense here. The whole point of Fed policy is to do 2 things. One is to be transparent, and two is to enhance the power of forward guidance policy. Instead, Fed communication confuses people. I think we have a real problem. So the people are confused, and they're like, oh my God, yeah, Fed pivot. Let's price in 6 cuts. Let's go up. If we look at the last 1 month, oh my goodness, has it been on a tear? It's been everything rally. So are we going to get a little bit of exhaustion? I want to show you one chart to make things quite simple here because we're talking about new all-time highs. But if we look here to a chart that is going to represent 12 months worth of data, I'll go here to candles. This is going to be very important. And keep this in mind because I want you to think about the Warren Buffett quote where we talked about those higher lows. And then we're going to pair that with Market Minervini telling us about a lockout period. So please bear with me for about 3 more minutes. I will walk you through it. The Dow is now in new all-time highs, which means that if it can hold this area going into next year, hey, that'll be support. That'll be a good area for us to actually look to pivot off of next year. We backtest roughly 360s. Man, that's going to be a strong buy. We look at QQQ. Well, now we have a higher high, which means this will be a pivot. If we can advance more into the end of the year, as the seasonality chart implies, maybe squeezing a little bit more juice, well, then we have more of a cushion. Right now, the cushion's not very high. If you look at a stock like XLK, the cushion is larger. We could afford to backtest before we actually even break the pattern. That's really significant. We look at SMH, same kind of pattern. What can we do? We can backtest next year to actually get a move higher. Whoa. Yeah, that's like a big deal. So when we think about the stock market being a device to transfer money from the impatient to the patient, that's exactly what this means. Now we're in blue sky territory. It should be easier for us to advance, and stocks are advancing. However, the broader market is not yet confirmed. I have this thesis, but unless we get above 480, we are so close to getting here that I can't say that this is going to be a bull pivot. What was the pivot in 2022? Man, it was a bear pivot. It was a slam. We went down a lot, right? We opened up right at the open of the next candle. Boop. It's definitely a pivot. And technically, it's an annual bearish engulfing pattern, which I did point out on Twitter. I know that for a fact because I pinned it to my post. Let me pin it to my profile. Let me just see if I can find that really fast. So I think this is important. Why? As we're approaching the end of the year, it's really important to zoom out. Here I have a 12-month bearish engulfing pattern. It only goes back 150 years, and it happened 5 times. What? That's right, 5 times in 150 years. So if we're thinking about these mega big time frames, let's look at a stock like Apple, where we see what happened here, right? There's the bear pivot, and then as we come back up, now we actually have room to back test here. What could launch next year? Man, the VR set could be a big deal. So if we think about this pattern, this is really coming here from, let me just make sure I didn't lose my lines. Nope. We're talking here about SPY pattern where if we keep forming these higher lows, we haven't broken the pattern yet. So if we're in a 52-week high and we keep doing defense, well, be patient, right? Be patient to let the chart continue to play out. And let me just go back in my lines. If I go back here to my 1-month chart, it's the same thing. We're looking for this exact same pattern, which last time led to 50% gains. So if we're going to potentially gain 50%, that's like a lot from here. It's a lot. So watch for those higher lows. We're only into the second candle. This could continue dramatically higher from here. That's this period right here. We don't form a lower low until we actually start going sideways and we get a warning that we're going to get the bear market. So there you go. That's the update. Watch for the pattern to break. But on the flip side, are we getting an early topping signal? Mark Minervini is someone that I respect and I like his content. Let's just read this really fast here. The Dow and NASDAQ have now closed in new all-time highs for 8 consecutive sessions, and the Dow has not pulled back for more than 2 to 3 days for more than 2%. While the strength is very impressive, it is clearly not sustainable. A lockout rally, like we've experienced, is a sign of strength. But as the market extends and individual stocks get extended, I generally use this strength for selling and nailing down gains on my swing trades. Well, that's exactly what I've been doing. I've been raising stops. I've been jamming stops, rotating my money into other trades. So when I talk about exactly doing this here, I talked about it yesterday. We talk about setting stops, raising stops, or trimming, jamming stops. Well, that's what one of the guys I really respect is saying here. This is a natural part of the maturation of the maturing cycle and a natural part of how we trade. I would agree with that. We've de-risked and booked a number of gains that were extended. That's exactly what I did. So I actually rotated and bought 3 new names today. So if you're interested in seeing exactly what those 3 names are, I think they have tremendous upside. You can come trade with me, Justin from YouTube, with their sale for December on right now at thealgo.com. If not, you can go back and watch our weekend video here on the left-hand side, which should show you my plan going into this week. If not, I look forward to seeing you on the stream tomorrow at 9:15 a.m. Thanks so much for tuning in.